Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome back to Tax Smarts Unlocked, the podcast dedicated to demystifying the complex world of taxes with a touch of humor. I'm your host, David Robson, and today we're diving into a topic that's pivotal for small business owners who are looking to secure their financial future: navigating the tax landscape of retirement accounts. Whether you're a seasoned entrepreneur pondering your next move or a newcomer hoping to avoid some common pitfalls, this episode is packed with insights just for you. Let's start by exploring the retirement account options available to small business owners. There are several to consider, each with unique benefits and tax implications. CP IRAs, simple IRAs, and solo 401ks, to name a few. A CP IRA is often attractive for its simplicity and flexibility in contribution amounts. With this type of plan, you can contribute as much as 25% of your compensation, up to a specific limit, which can substantially lower your taxable income. Then there's the simple IRA, a great option for businesses with fewer than 100 employees. Contributions are pre-tax, just like a SEP IRA, but it's important to note that this plan requires employer contributions, adding to its allure. And for the solo entrepreneurs, there's the solo 401k. This plan is favorable for its high contribution limits, which could be perfect for those who've had a particularly profitable year and want to reduce tax liability. The choice of which retirement account suits you best depends on numerous factors, including business size and your annual income. Now, on to contribution limits. It's crucial to understand how these limits work because they play a major role in tax planning. Each retirement account type has its own rules. For example, in 2023, the SEP IRA allows contributions up to $66,000 or 25% of compensation, whichever is less. For a simple IRA, the employee contribution limit is $15,500, with an additional catch-up contribution of $3,500 if you're over 50. The solo 401k shines with a potential total contribution limit of $66,000, which includes both employee and employer contributions. The higher limits make solo 401ks attractive to owners who are both employer and employee. Knowing these limits not only helps in maximizing your retirement savings, but also in substantially reducing your tax liability each year. Let's turn attention to the tax implications of contributions versus withdrawals from these accounts. Contributions to plans like SEP IRAs and simple IRAs are typically pre-tax, meaning they reduce your taxable income for the year in which you make them. This immediate tax deferral is a significant advantage. On the withdrawal side, when you retire, distributions from traditional accounts will be taxed as ordinary income, which is something to consider in your planning. Roth accounts, on the other hand, are funded with after-tax dollars, so withdrawals in retirement are generally tax-free. This can be a brilliant strategy if you anticipate being in a higher tax bracket later down the line. The choice between pre-tax and Roth contributions often depends on your current versus expected future tax scenarios. What about maximizing contributions to minimize taxable income? One strategy particularly worth exploring is making the highest permissible contributions to your chosen retirement accounts each year, especially in high-income years. For small business owners anticipating fluctuating income, leaning on the flexibility of a SEP IRA where contributions are discretionary can be beneficial. In prosperous years, you can contribute more, and during leaner times, you can scale back. This strategic flexibility makes SEP IRAs an appealing choice for many small business operators. Now let's delve into some real-world case studies highlighting successful retirement account management. Consider Sarah, a small business owner who uses a solo 401k. By maximizing her contributions each year, she effectively decreased her taxable income while setting herself up for a comfortable retirement. Another example is Tom and Lisa, a couple running a family business. They opted for a SEP IRA and were able to significantly increase their savings during their peak earning years, cleverly adjusting their contributions as their business's revenue fluctuated. It's time to address common pitfalls and misconceptions surrounding retirement accounts. One widespread misconception is that underfunding retirement accounts is safer due to tax concerns. In reality, undercontributing can lead to missing out on tax-sheltered growth opportunities. Another pitfall is not understanding the difference between Roth and traditional accounts, causing potential future tax burdens. Many business owners also fail to regularly update their retirement plans, which I must stress is crucial to accommodate changes in income and tax laws. And speaking of updates, a valuable tip for small business owners is to conduct an annual review of your retirement planning strategies. This isn't just about checking balances, but also includes assessing changes in your business and personal life that might impact your tax situation. Are there new tax regulations to consider? Are you approaching an age with specific benefits like catch-up contributions? Regularly revisiting your strategy ensures you're making the most of available opportunities and not leaving potential savings on the table. Lastly, let's review some resources and tools to assist small business owners with retirement planning and tax efficiency. Many financial institutions offer free calculators that can give you a snapshot of your potential savings with various retirement accounts. You might also consider consulting with a tax advisor who has experience with small business retirement planning, someone who can tailor advice to your specific situation and help you navigate tricky tax laws. Utilizing accounting software with tax planning features can also help you manage your business and retirement contributions more effectively. As we wrap up this episode of Tax Smarts Unlocked, I hope you've gathered some insights on how to harness the power of retirement accounts for tax efficiency. We've covered the nuts and bolts of account types, contribution limits, and tax implications, while debunking some prevalent myths. Small business owners stand to gain much by aligning their retirement strategies with their tax planning efforts. Remember, smart planning today can lead to a financially secure tomorrow. Thank you for tuning in, and I look forward to exploring more tax topics with you in our future episodes. Until then, stay savvy and never be afraid to ask a professional for guidance. I'm David Robson, and this has been Tax Smarts Unlocked.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services. Each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.